So today's Cardinal lesson, we're addressing like a major objection that I've been dealing with in offering long-term care insurance since the 1980s. And the way this worked in the 80s and the 90s and the new millennium, when you're a long-term care insurance salesperson like me, or you're the manager of them and the leader of them, and you're doing training for them, and you're going out trying to convince clients to protect themselves against and protect their family against this risk of them needing nursing home care, assisted living care, home health care, what is traditionally called as long-term care. And what we're talking about today is we're talking about long-term care insurance. Why not skip the long-term care insurance and just pay for it yourself? That's the objection that we used to get a lot. We don't get it as much anymore because we have so many people calling us here at Cardinal as a result of these videos, and they've watched video after video, and they're just actually interested in long-term care. They want to hear what we have to say. In the old days, we were calling the people. And I say old days, 10 years ago, we were calling people, bringing up this subject, and this was a very common objection that people would give. I've got enough money, I'll just pay for it myself. So I want to bring Tom on, and I want Tom to really address at a deeper level, like, why are we doing this video?
Yeah, I mean, I think we're doing this video one to, like Hans said, to address this objection. Should I fund it myself? And a lot of times, this is coming from people who objectively could fund it themselves, but it's not always the best way to do it. And so, we really just want to walk you through sort of what this looks like. And so, let me bring up the show notes, and then we'll get into sort of our stories here in a second. But with these show notes, you can find at the link below our video. They're also on our website. Again, today's show notes aren't real long. We have the board there, but more importantly, and I'm going to bring up this next slide, is we really want to give you sort of a story. And I've talked about this on previous videos, but back in it's sort of in 2018, I was 25 years old. Is I got sick, and not just a little sick. I was very seriously sick. I mean, I was not able to walk, and I'll go through this sort of the quick version here in a second. But I couldn't walk. I was in a wheelchair for a while. I had an 8-month old. You can see Renly, me holding him in my lap there. This was just traumatic for our family, and so it really started. I had a week. I had like a headache. I wasn't. I thought I was just getting sick, and it was progressively getting worse. My wife Chelsea could see it more than I would, and me being the man, I was pretty stubborn, and I'll be fine. I'll get over it, which clearly was not the right approach. But she eventually sort of forced me and almost dragged me to the hospital, and I sort of convinced them, no, I'm fine. They sent me home. A day later, I was out of it. I mean, I have no recollection for about 3 days. I was unresponsive. I mean, I could open my eyes, but other than that, I mean, it was just blank. There was nothing there. And they were having to sort of, I was at the hospital. I mean, it was very, very scary going through that. Fortunately, I started coming to after a couple of days. They sent me home. A day later, I ended up back in the hospital, and I could not move my legs at all. I mean, my legs I couldn't move them. And so, we fast forward. I went through a lot of physical therapy. I'm much better now, fortunately. I praise God that worked out that way. But have since been diagnosed. I'm on treatment. I'm very stable now. But all the point to be is you don't know when you're going to get sick, right? Who would have expected a 25-year-old healthy guy who played sports his whole life to be in a wheelchair for a month? I mean, I was in the hospital for a month. I was in a wheelchair for about 3 months. You just don't know that's going to happen until it does. And so we get this objection. I can just fund it myself. And a lot of times that's sort of a mask for really not wanting to deal with the chance that this could happen. Right. I mean, from a professional standpoint, I can empathize and really speak to what this looks like. My wife was having to try to get me in and out of a shower. She's having to help me bathe. I mean, these things were really hard on her. She's trying to take care of the household, take care of our 8-month old son, and manage everything. And she got sick doing all this. I mean, we talk about this, but I saw it. I mean, she got sick. All the stress it put on her, all the stuff she had to go through, and really, when you're saying self-funding, you're really putting a lot of that burden on your family to go through and provide all that. So, I mean, I could give you a much longer story. I mean, it was again very traumatic, very hard. I'm very thankful that I'm fine now. It's well managed. It's hopefully long term will be fine. But again, it was very eye opening for a 25-year-old to go through that. So Hans, why don't you speak a little bit about sort of your experience with long term care, what that looked like for your family?
Yeah, well, first of all, my dad was in the business since 1952, the same business I'm in. I mean, he brought me in the business and it had a lot of to do with my training. And then he retired in like 1985. I came in the business in 1976. Um, so then we fast forward along to 1998. He had a stroke in January 1st, or just right on New Year's Eve, and he spent about the month of January, at UNC Hospital. Um, and then it was my job to drive my mom and dad back to Florida, where they lived at the time. Um, and that was really the last time I spent with my dad was on that drive. So I still value it, but I was his caregiver and my mom is in and out of probably 20 McDonald's bathrooms or Holiday Inn bathrooms or whatever. Um, but anyhow, so I had tried for several years to get my mom and dad to buy long-term care insurance. And boy, my dad wasn't hearing any of that. He was giving this objection along with about four or five others. And pretty much he wasn't going to buy that from the person he trained in the business. And so he just had no long-term care insurance. So my sister, Margot, who's on the end there, she was a nurse practitioner. And she and my mom, who was a nurse, basically took care of my dad during February, March, and April. And then my father passed away in April, but those were three really tough months. And it would have been nice to be able to hire somebody from the outside to come in and take care of him, really for a relief on the family. But anyhow, after he passed away, I sat down with my mom and I said, I'm selling you long-term care insurance. And my sister, again, the nurse practitioner, she objected loudly. That stuff isn't going to be any good. Blah, blah, blah. And I said, look, I'm paying for it myself. So you don't really have any control over this. And I put a policy on my mom. I paid for it. And about a year or two later, my mom was in her early 70s at the time. About a year or two later, my mom took over the premiums. But that's kind of beside the point. So then you move the clock ahead about another 8 or 9 years, and my mom developed early Alzheimer's or early dementia. And my sister, Margot, got her involved in some experimental studies, which I really think with experimental drugs, we're going back to around 2005, 2006, 2007. She got her involved, and I think that prolonged her life and slowed down the onset. I mean, I don't know that for sure, but my mom functioned very well for 4 or 5 years living in her apartment. My sister not too far away. She was still driving. She probably shouldn't have been. Um, in any case, we're just kind of going along, wondering when we're going to have to, the rest of the family, kind of come in and do something about my mom's needing care. And then we're going to kick in that long-term care policy to pay for it, which was really nice to have that as an option. And my sister Margot passed away suddenly. And she was objectionable to a lot of things within the family. And, we don't hold that against her, but it just, she was not wanting anybody to care for my mom other than her. And so all of a sudden she had a brain aneurysm. She passed away. We had to take my mom to the hospital to see her, just so my mom would understand what just happened. So again, my mom now doesn't want to move out of Florida. She's got no family there. So the other four of us flew down there on a monthly schedule, a week a month, and we sat and did our jobs from my mom's kitchen table. And that was very stressful on the family. And finally, after a couple of cycles, my mom saw it and the doctor said, Mary, you've got to move closer to your family. And so we relocated my mom up to North Carolina. We considered having her move in with us, but with a person with dementia and memory issues, they need 24-hour supervision. And it just, it sounds easy to do that. And she lived with us for about a month. Um, and we rotated cycles being there. But anyhow, my mom got placed in a very good place. We went to see her every day, and she lived about 3 or 4 years with all the bills being paid by the long-term care insurance. So um, I tell you this story, and I also bought long-term care insurance on myself before age 50. Obviously, I was in the business. I knew about it, and I have these policies to this day. Uh, and I sold it to some of my other brothers and my siblings. So, getting back to the purpose of the video, um, Tom and I just wanted both to tell you our stories. We've told them before on video. We're going to keep telling them, just because this is the decision to purchase this insurance protection, and there's a lot of different ways to take care of the problem, is it really is a subjective decision. I mean, it is a emotional decision, and what we do a lot of times when we're making decisions is we go to the objective, to the facts and the figures to justify the decision we made emotionally. And I'm not sure if that is good business or good logic or good, proper way to do things, but um, what I really wanted to deal with today is this objection that people that have a good sized amount of assets do, is I think that I'll just pay for it myself. I don't really want to talk about that. I don't think those long-term care policies are a very good deal. I'll just pay for it myself if that happens to me. And that objection, I've been able to really sit down with some clients who gave that to me, and through the relationship impress upon them, do you really want to do that? I mean, are you sure what that is? And I want to give you an idea of what that looks like. So where we're going to start today is, and we do this with a lot of clients, is if you're 65 now, or 70 or 68 or early 70s or late 50s, I want you to envision your 85-year-old self. And you want to start thinking about, and then you want your 65-year-old self telling your 85-year-old self, yeah, you'll be fine. You're 85 and now you've had a stroke like Mr. Scheil did, and you need help with bathing, dressing, eating, transferring, and you certainly aren't managing the money now. I mean, maybe you're given some direction, but it's not even your spouse that's doing that, or your wife or husband. It's actually your oldest daughter who is in charge of the money now, because you made her power of attorney, and you put yourself in that situation. And then I want you to tell yourself, oh, this won't be a problem. We'll just pay the expense of this yourself. And I really want you to think about what that looks like. And I could tell you another quick story of, we deal with a lot of people that are in their 80s and 90s, and their kids, their adult kids, are our clients. And they will come to us for financial planning, or they found us on the videos. But what they want dealt with first is they're having to go in and take care of mom or dad. I mean, it's just, mom or dad's been living alone. Something happened. We now got to bring in care. And I can think of this one gentleman, who very well to do. He was on the pay it yourself plan. And so he needed home health care. And his kids who were providing it had to go somewhere for a graduation and something. They had to leave town for a week. And so they hired home health care workers to come in and take care of dad. He threw them out after about the third day. I mean, he just told them to leave. And he found out how much they were costing. And, in his opinion, all they were doing was watching TV and whatever. And, they're doing the dishes or something. And so my point is that it is really hard to get people who are well-to-do. They've managed their money very well. It's like Tom said, they're capable of paying for it yourself. It's really hard to get them to part with some of that money, to spend it on home health care workers just so they can stay in their house. Now, I want to bring Tom back on and just kind of go around and talk about this seeing your 85-year-old self and how we use that in our practice.
Yeah, I mean, I think a lot of it comes down to denial. And I went through this, right? I got sick, and you want to get back to what you could do previously. And you try to do that more quickly than you really should. And a lot of it comes down to the fact that it's hard to admit that you are unable to do the things that you really want to do. And so that just gets worse over time, right? I mean, it took me a while to really come to grips with what I was dealing with. I mean, there was a lot of, I went to therapy. I did all sorts of things because it's a hard emotional thing to go through. Then you fast forward to being 85 and trying to figure out this, you might have some cognitive decline. And like Hans said, is people end up they have the money because they don't spend it frivolously. They're wise with their money. They keep it, they spend wisely. And so they look at this cost, and they're bringing in people who are doing things that they still really want to be able to do, even though it's maybe not safe for them to do. And they don't want to spend, $20 an hour, $25 an hour, whatever the cost is, on this person who they don't feel like is needed. It's really hard to talk them through that. And who ends up bearing the burden of that is the family. I mean, that's just that's a full stop. If you don't have someone coming in giving the care, the family is going to be the one doing it. And this isn't to say your family isn't involved when if you hire someone to come in. They certainly are involved. And you want them to be involved as your loved ones, as your children, as your spouse, loving you and being support for you. But you don't want them doing the hard work of getting you in and out of bed, helping you bathe, right? I mean, like I said, I'll share a quick story. And again, this is a little bit different scenario because I was much younger, but I was in the hospital still. I really wanted to shower, and I convinced myself. I'd been through some rounds of physical therapy. I had a walker. I was like, I think I can make it to the shower. My wife's sitting there saying, "Are we sure that's a good idea?" And I've learned now I should probably listen to her more often. But I decided that I was gonna. I think we can do it. I'll need your help. We got about halfway there, and it was very clear we were not going to make it to the shower. So I'm sitting there trying not to fall, trying not to get hurt, and my wife's trying to help me. I'm a big guy; she's young and strong, and who knows what would have happened if we were in our 80s and all this had gone down. And she's calling the nurse having to come in there trying to get me back in bed, and they essentially scolded me and said, no longer, you don't do that anymore. We'll help you shower. But it all came down to I wanted to be able to do this thing that I used to be able to do, and now I can't, and we need help. And she was the one that, it could have gone much worse. I could have fallen. I could have fallen on her. I could have hurt her. I mean, there's all sorts of things that can go wrong in that scenario. You want someone who's trained to do that care for doing the hard work of giving the care. And you want your family to be there as family, being the loved ones and sort of being around you during that time. So, I mean, I just think that's a lot of times people think, well, I want my family to be involved. They're going to be involved. You just don't want them doing the hard work. And if you really think you do want them doing that hard work, that just tells me you haven't experienced or you don't know someone who's been through that and really seen what that entails.
Okay, so when we're envisioning you at 75, or you're envisioning you, that's not to say 85, I mean, that's not to say this doesn't happen to people in their 70s and 60s. It certainly does in early 80s. We're just trying to take you to a point so that you can see. And I have some questions for you. Are you still managing your investments? Are you doing that day to day? Are you, you're obviously been taking the minimum distribution out of your IRA, but are you really aware of which account and what's the best places to pull money? Some people are at 85. A lot of them have already delegated that to their oldest son or their oldest daughter, or a power of attorney, and or at least they're sharing the responsibilities so that if they have a cognitive decline, that the stuff doesn't become a mess. Are you still paying your own bills? And then the real question is, when you say you're going to pay for it yourself, are you willing to spend a bunch of that money? Because it is not cheap to bring people into your home, professional people, to provide care for the activities of daily living or supervision for a person. And if you have a lot of money and a lot of investments and you save those, it's going to be hard to get you to part with that. And furthermore, you're probably going to want to stay in your own home as opposed to go to a facility. Now, that's not always true, but I'm telling you that your money is what's going to allow you to have the choice. And then are you really willing to spend that money? And my experience has been a lot of people that are not insured they're really chintzy with the money, and they're going to take care of themselves or their spouses far too long, which creates more problems. And when those people had bought insurance years earlier, they're all for collecting off of it. Now, we talk about cognitive decline, how does that work? And we're really talking about now you're into the situation where we have to convince you to spend your own money. And prior to that, we may have to convince you to turn over the matters of the management of your own money. And when we sit down and walk clients through this, when they're in their 60s coming to us, people really look upon this as a benefit because they have us as a fallback and advisors to really set themselves up to win, if this happens to them. Okay, the next thing we're going to talk about is income tax. Is this when people have enough money to self-fund long-term care, that's telling me they're well-to-do. They're always interested in hearing what we have to say about income tax. So we're going to talk about long-term care and assisted living. So if you do self-fund, this is home health care and assisted living is tax deductible. So at the very least, if you do this self-fund thing, we're going to need to have a plan in place that we're going to incur these expenses, keep track of them, and then use the medical expense deduction, which you have thresholds and that kind of thing. But a lot of people who get up there in years, when they start spending $10,000 a month on something that's deductible, they don't necessarily have the income to make that deduction worth something. And that's where I'm going to tell them that drawing out from the IRA first, and I've done some videos on this, that if you are in a self-funding or your parents are, and they still have money in their IRA, let's go ahead and use that to pay for the care, because that's pulling taxable money out, and we're going to have a corresponding tax deduction. So it's not going to quite zero out, but it really makes sense to spend that IRA money first on care. The benefits from long-term care insurance are tax exempt. So if you buy this policy, doesn't matter what kind you buy, and now you're collecting that $10,000 a month coming out of the policy every month, there's no taxes due on that. It's tax exempt as long as it's used to pay for care or it's under the IRS threshold, which is currently a little over $12,000 a month. And then the question that we're going to have for your daughter, if she's managing the money, or your son, and a question we're going to have for you is, which investments do we sell to pay for this care, and which do we sell first? So we've gotten into a little bit of logic on this. Tom, do you have anything more to say about taxes before we jump into the quality of care?
No, I mean, I think the point that you made, that the benefits coming out of a long-term care policy are tax-free, which is a nice benefit there. I think that can sometimes be oversold, right? I mean, I think that's not the reason we're purchasing the long-term care, but certainly is nice to not have to worry about the taxes. And then the bigger issue, I think, is like you said, if a family member, sort of by definition, you're needing care, you're probably not wanting to worry about the investments. You maybe shouldn't be managing the accounts. You really, if you're going to truly go the self-funding route, which again, sometimes people choose that route, you need to have some type of document in place, some type of instructions for the kids of touch this account first, touch this account first, sell this, don't sell this. Because at the end of the day, most kids have no idea. They might not even know what amount of money you have. They don't know which accounts to go for. They're thrown into this sort of, chaotic situation where mom or dad is sick. We're trying to take care of them from the health wise, and we got to figure out how to pay this bill. Where do we even get the money from? I mean, it's chaos. I mean, it's very traumatic. And so having something in place, if you're going to go the self-funding route, to instruct them which accounts to use, I think would be a wise thing to do.
Okay, now let's talk about quality of care. Most long-term care insurance has care coordination optional. And I've seen the companies really ramp this up in the last few years, even on the old policies. And, we have one of the companies that has this care concierge, but the whole idea is when you need care, you contact them first, and you're going to get assigned a care coordinator, and they're going to set up the home health care if that's what you need. And before you set up the home health care, you got to set up an assessment. and the home health care company is going to pay for that assessment, and they're going to have a social worker come in and just sit with you and sit with your family and decide what's the appropriate setting and can you be cared for at home, and then they're going to write out a plan of care, and that's all done with the insurance company coordinating that. It's a tremendous benefit to have, and we're able to lean on that when our clients call us and they're getting ready to start a long-term care claim. The best care is at home from an agency. I mean, you're going to get better care if it can work out that way and be feasible. If you're hiring an agency, because you can fire an agency and you can get another one. And I guess you could move from one assisted living to another assisted living, but the best care, in my opinion, is going to be received at home if home is a feasible option through a specific care plan that's set up for you. And by the way, it's expensive. The best facility care is found through professionals. So, I know when we found a place for my mom, we spent a lot of time and we went into those places and we showed up unannounced. We looked at family care homes, and it would have been nice to have some of these services, or we would have, maybe they existed, we just didn't access them. It's 15 years ago, to where we put the professionals on it. And that can be all gotten from the insurance company, where they're going to go through and find options for you. And you're still going to have family visits and that kind of thing, but having the professionals find that is really important. And where we're going to talk now about transfer of risk. And I was at a meeting of estate planning professionals where we're dealing with people in the tens of millions, of some of them the hundreds of millions of assets. I mean, these are with the planners, not the clients that are in there, but as the planners are in there. And I'm listening to a panel talking about long-term care. And this one gentleman had become a big advocate of getting his clients who are very well off, is putting the long-term care plan into the estate plan. So this is all taken care of. He does that with insurance or the hybrid life long-term care. But he was describing the pivotal client that got him into this, because this guy only works with people very high net worth. And one of his clients was asking him about long-term care. And his response was, Mr. Client, you have enough wealth that you could buy a small long-term care insurance company. I mean, you could buy the whole company and then, have them issue a policy. So now you're looking to buy just one policy to cover you and your spouse or your wife. And to a degree, he was saying that doesn't really make sense to me as your advisor. There are a lot of advisors that this is what they recommend. A lot of investment advisors, financial planners that deal with the very well off, they just say, well, you got enough money, you'll pay for it. But what the client came back to him and said, he said, I transfer all kind of risks that I could afford to pay for, and that's how I've accumulated wealth, is that I put to the insurance company risks. So I wanted to just walk through with most of you. You carry homeowners insurance. You probably have a very expensive home, and you have insurance in case there's a fire or theft or damage, and you pay that, and you got enough money that if the home went away, you could just afford to replace it. So why do you pay a homeowner's insurance premium? You go through car insurance, you have enough wealth. I mean, you have to have liability car insurance, but you don't have to have collision. And if you've got an expensive car out there, why do you carry car insurance on it? I mean, why don't you just carry that risk yourself? Go on with liability umbrella. I mean, people have, I think my umbrella is now up to $5 million. It's a $5 million personal umbrella that sits on top of my car insurance and homeowners insurance. And again, I pay a premium. That premium is not very large. And the same thing true with life insurance, is you have life insurance on your life, and basically you have all this wealth that you could pass on to your family. So gotten a little bit transactional here in the end. is that long-term care insurance could easily cost 300, 400, 500,000 or more. If it goes on for years and years and years, this is really a risk that if you don't have to carry it yourself, pass it on to the insurance company. I'm going to tell you that we have solutions here at Cardinal, all kinds of solutions where you can make a single transfer of assets. And then if you don't use it for long-term care, it'll pay out a larger death benefit to your heirs. We have the old-fashioned long-term care that has been around for a long time, where you pay a monthly or an annual premium and you pay that for the rest of your life or a limited period, and it pays out. That's less expensive than the hybrid stuff. We have annuity long-term care, which a lot of times is for people who can't health qualify. They've got sicknesses and they say they're not eligible for long-term care. We have solutions for them. So my suggestion to you, if we've got your attention today around the need for this and around for a simple solution that maybe you've been relying on, give us a call. I mean, we're happy without obligation. We're not going to start going through all these stories with you again unless you want us to. We'll be happy to just have a transactional conversation, and we do some financial planning for you and just see what money you're going to use to protect your family. And you do this stuff for your family. Now, I want to bring Tom back on for some final words on this.
Yeah, I mean, I think one thing that's really telling, and you listening don't have this benefit to see the clients that come in, but the clients that come in that really start wanting this are the ones who have been through this with a family member, is they have seen what's happened. A lot of times the parent had the money to pay for it, but they saw what this looked like and they come in gung ho. I want a policy for myself. I do not want to put my kids through what I just went through. And I think that should be telling. If you haven't experienced this, that's great. I mean, I'm glad that you have not had to go through this. But if you just look at the broad picture of the people who really want this are the ones who've seen what it looks like without the plan, and they're signing up left and right. And so I think just take that with a, really need to have some self-reflection here. Is really the issue you just don't want to think about needing that? Do you not think you might not need that? Or is the real issue, something else? And so most of the times it's just the fact that you don't want to deal with the fact that you might become incapacitated at some point. And again, just I hopefully my story can just show you that no one expects that to happen. Everyone thinks they're going to be the one who doesn't need it. You just don't know until it happens that it's going to happen to you.
Okay. We were making plans for Tom to work the rest of his life in a wheelchair. I mean, we didn't know where that was going, but we're certainly glad to have him back years later in full form. So, with that being said, the only really subject we've stayed on all day is long-term care, and maybe we've talked a little bit about taxes, and we talked a little bit about income, maybe some about estate. So, with that, I'm Hans Scheil,
And I'm Tom Griffith.
and we thank you very much for listening.
Thank you.